Hello friends, we are going to be talking about four things to look for when you are going to place a trade. And this is basically price action trading strategy. But before we go there, I want to talk about my paid mentorship program, which teaches price action trading strategies for intraday and swing. And I will basically put a link in the description for my free webinar if you choose to attend it. I will explain what my program offers in depth, and this will basically give you a lifetime membership, which will allow you to have a mobile app as well as access on the web through a laptop, and you can practice, you can learn on the go, and there'll be weekly sessions on doubt removal for the rest of your lifetime. So this is unlike other programs where they handhold you for 1 month, 2 months. This is for a lifetime. It's my silver membership. So if you're interested, the link will be in the description. Now let's get back to four things you need to look out for before you place a trade in the market. Now uh, I've got a list here, and let's look at the list. We have EMS here. So what things do we need to look out for? What's happening with this basically? Do we see something here? What we have here is that the price has been stagnating, accumulating, if you will, for a while, and then price has gone up, right? So price has gone up, and again it seems to have entered a period of consolidation. So should you buy or should you not buy here? Is the price going up or is the price stalled, bouncing up and down? If you're not clear, fine. There are around 2,300 plus stocks in NSE. Let's move on to the next. Let's look at City Union Bank, and let's see what the chart is telling us. City Union Bank. Let's zoom in, because if you let me reset the chart on the daily, right? So if I do something like this, right there, I can see that the price is consolidating, gone up a bit, higher high, higher low, again higher high, higher low. But that's for the experienced trader. If you are not as experienced as reading charts, what you can do is zoom in. See, I zoomed in now. Zoom in more, as much as it makes you comfortable. So if you see here, what you have is basically price went up here and then prices come down and prices still not reached that level. So do you place a buy order here or do you place a sell order here? So if you just look at the chart, right? So if you see this low and this low, you see this high and this high. So what the price is doing is going up, taking a breather. So you have your impulse move, and then you have a move back, and then price is resuming its upward journey. So if you are sure about this, and if you see an appropriate entry strategy, you should go in for a buy. If you are into swing trading, equity swing trading, if you are into FNO or intraday, then again the choice is up to you depending on the time frame you trade. But if you're not clear, right, whether the trend is up, down, sideways, then please move on to the next chart. So I'll move on to the next chart, Himmat Singh ka Seth. Now see here, price has been consolidating a bit here, and there it's gone up. It's come down quite a bit here. And if you see here, you have drop, base, and rally. It's gone up two candles with increasing volume, and now again you have a shooting star. So shooting star or a gravestone doji, if you will. So should you take an entry here? Depends on what you know about the market. If you are my student, I would say please wait it out. Chances are price is probably going to come down here. You're going to get another doji or a bearish candle here. But as I said, probably there are no guarantees in the market, just like in life. So, but at least you're sure, right? The price is an uptrend. The price is come down. If not, always you can always switch to weekly. Now, when we have gone to weekly on Himmat Singh Day, what do we see? Right? This is an area of consolidation. Let me mark it here. You have consolidation here, right? Clear breakout, a retest, and then this. See the retest and the retracement is on lower volumes, and the candle The candle with wicks on either side is basically, although the volume is not that great compared to the 20 period volume, but still, nonetheless, on a weekly time frame, you have up movement. So let's switch to the daily. Now, wait for a proper entry trigger before you go in. At least you're sure of the trend, right? So, identification of trend is very important before you uh, enter the market. And basically, you should not be trading from anywhere, right? Suppose if you took a trade here, or you took a trade somewhere here above the high here, and you saw good volume, you placed it above the high, or you placed it above the close. If you placed it above the close, you probably would have triggered, and then your SL would have gotten triggered. And let's look at another chart. Here again, see this is going all over the place. I'm going to reset the chart. Right now, we have some structure. Now you'll say, Neeraj, where is the price going? Price gone down, price gone up, stagnated a bit, consolidated, gone down again. So it's dancing around all the moving averages, including the 200 EM. So should you enter such a stock? Up to you again, based on your trading strategy. But if you were my student, sorry, no can do. This is a horrible chart. Let's move on to the next. Don't be so desperate to enter the market, right? Market is not going anywhere. And I am assuming you're all healthy, hale, hearty, whether you're a 75-year-old, an 80-year-old, or a 25-year-old. You have decades to live, right? Never say die. So, move on to the next chart. Unless you get something where you can identify the structure and you're trading from an area of importance, just don't go in like a bull and go break into a China shop, and then ultimately the municipality comes and takes you away because you've done something that is not allowed by law. You can't break into somebody's shop, even though you're a bull, and bull in a China shop is a proverb. You get what I'm saying, right? So I'm combining a sense of humor with market sense. Now, if you see here, nice candles coming here. So you could have taken a trade here, and then you would have made so much money. I can tell you that because hindsight is 2020, but that would be lying. Why would you take a trade here? Is this an area of importance? This is just in the middle of so many candles that are just bullish. For God's sakes, you could have taken it here, man. Look at the volume. Real juicy volume, almost 3x. And you take it above the high, you have gotten and filled, and down you go. You're out. So, what do we do in such a case? In such a case, you should always take trades on an area of importance. Now, what is an area of importance? It can be something like a trend line. Chosen the wrong tool. This one, take a trend line, right? Now, this trend line, this is a candle, right? This candle has broken. Let me zoom in this candle, right? Can you see this candle? This candle has broken. This candle has broken above the trend line. It's still below the EMA 200. Up to you whether you wish to take it or not. Let's take a look at this one. You are taking it here where the candle is hugging the EMA 200, right? The EMA, it's hugging the EMA 200, uh, uh, right? At least the open is right. It's kind of close, and you've got good volume. So if you take it above the high here, your stop loss is a little below the low of this candle. Since this is 11%, up to you where you want to keep it. But just give an example. This is an area of importance because this is a dynamic. This is basically a support, and now it's turned resistance. So this is a dynamic resistance, support resistance flip. And if you take something here, right? If you take something here and you keep an appropriate stop loss, again based on your trading strategy, you would have been in the money, and then you trail it till you get taken out, or depends on how you want to do it. So this is an area of importance. Now, this is one thing, right? What about this one? I've seen that the price has come down, right? So price was in uptrend, prices come downtrend. What was earlier support EMA 200, this thick red line has now become resistance. Price is consolidating, and we have a nice candle, right? Look at the volume, a big bearish engulfing candle, and now if you want to take it, you could take a shot here below this if you're doing FNO or intraday, depending. And of course, you'll change the time frame. Remember, I'm on the daily, but this is just to teach you. The time frame can change based on what market you are in, what instrument you're trading, and what type are you trading. Are you a swing trader, FNO, option, intraday, delivery, equity, right? And equity you can't short, obviously. So you'll have to go long. But assuming you are FNO or intraday, right? So this candle, you take a short below this here, and this candle is 20%. So obviously you will not keep your SL here, right? If you keep your SL here, if you've taken such trades, then you immediately need to contact me. Please click on the link. I'll also put my email ID because you need immediate training and mentorship because you know nothing on how to trade. You must have blown up your account multiple times by now. If you haven't, trust me, you will. So you'll need to contact me on an urgent basis, and I'll reply back to you in due course. Right. So anyway, so if you place a trade here in an appropriate SL, you would make some money, but the price has now gone back. So this again is an area of importance. Why? Because this is a zone. Price was meandering here for a while, up, down, up, down, up, down. 200 was also basically acting as dynamic resistance. Let's go to another chart. My God, price is doing nothing here. So let's go to another chart. What we want as traders is quick in and out, whether it's a few minutes, a few hours, a few days, or a few weeks at best. We don't want to be holding the stock unless you're a long-term investor for months and months on end, right? So we want to get in quickly and we want to get out. Now, we have identified that the price is in a trend here. So, but the price is basically stuck here. So we're not interested here, right? So let's go to Gujarat Ambuja. Gujarat Ambuja again is in a clear downtrend. It's trying to break but has not been able to do so. One try here, second try, third try, lower high, lower low, lower high, lower low, and then possible change of character, but didn't happen because of the evening star here, and the price has gone down. Now, what will the price do here? You will say, Neeraj, what can we do here? Are we going to go long? Are we going to go down? So, we have already established that the price is in a long-term downtrend. Go on the weekly. If you see here, where was the price here in March and where is the price here now? If you're still not sure, you can obviously go monthly, right? So you have this chance, right? Price gone down, gone down, gone down. Now, because the price has gone down, you should be looking for shorts or longs. I hope you know the answer. If not, then again, my contact details are there. Please approach me for mentorship because if you don't know what to do here, then you obviously don't know what you're doing and you should not be in the market. Entering the market without training is like jumping into a swimming pool on the deep side without knowing how to swim. You're going to sink. Okay. Now let's look at this chart, Parag Milk Foods, right? We are on the daily lower high, although the low is not lower than this one, but the high is definitely low. This one, this swing high and this swing low. So it's a lower high compared to this high. This high is lower compared to this low is lower. Now, prices appears to be stagnant for a while. It may go up, it may go down. But if you're not sure, switch to the weekly. On the weekly, it's clear that the price is in a range. On the daily, also, if you zoom in, you will understand that the price is in the range. If you don't zoom in and you just look at it like this, right, we can say the price is in a downtrend, but really no. Look at the weekly. My God. Although it's going up and down, right? You can see this range here. So in such a case, in the range, if you still want to trade and you're really desperate, you can take a trade at the lows here, which is the support, or a short. You can go long from the lows and short from the highs. And of course, you can have something like this, a false breakout here and a false breakout here with lovely volume, where big money has trapped traders. And you have an evening star here, and price has gone down and gone right down up to this level. So if you had taken a trade here and play, you should know where to place your SL because you've entered a trade, right? Now, when do you get out of the trade? There are only two scenarios. Either you make money or you lose money, right? Either way, you need to get out. You're not married to a stock unless you're a long-term investor. And I'm teaching trading, not investing. So my audience will be traders. It could be short-term, intraday, swing. Swing can be short swing, medium swing, long-term swing, but definitely not investing. Of course, you can use technical indicators for investing as well, but I'm talking from the point of traders. When do you exit a stock? If you entered here and kept your SL somewhere here or something, right? Because this is a 23% candle. So if you kept it somewhere here, whatever, or you entered above the high here, you kept it somewhere here, right? Because this candle is also 14%. So if you kept it at place, you have bought it, you have been taken out. So you have been taken out, but your SL has been hit. You should, when you enter, right, you should know your entry price, why you're entering, what is your possible targets, what is your stop loss, meaning your idea of entering a trade, either long or short, has been negated. The market has gone against your view of that instrument at that time interval. Forget any interval, but your view has gone wrong. Your view may be on hourly, 4 hourly, daily, weekly, monthly. If the market has gone against your view and your SLs are in the system as they should be, you then you're taken out. So your SL should be at a proper place. So I'm recapping now the four things that you need to look at when you're going and entering the market, right? Taking a trade. You should have market structure. You should trade from an area of importance. Just don't go anywhere in the market on the basis of a candle. You should know your entry trigger and you should exit when you're wrong, meaning when your SL gets hit. I hope you had a good learning and I wish you all the best. Hope you have good trading profits. And if you haven't subscribed to my channel, please do so. Hit the bell notification, forward this video and my channel link to as many people who are serious about trading, right? Because trading is serious business. If you don't know, if you don't have a plan, don't take a trade. Always trade your plan. If you don't have a plan, then the market is going to whoop you. By whoop you, I mean the market is going to flog you, going to take away your capital time and time again. And then don't keep complaining. Oh, the market is a gamble. I bought it and my SL got hit. I sold and my SL got hit. Even with the best knowledge, your SL will get hit from time to time. It all depends on having a favorable risk reward ratio. But then, of course, that is part of understanding and learning how to trade effectively. Okay, thank you for watching. I'll see you in the next.